Hello and welcome to this Forex Preview at XM.com. We'll be discussing the upcoming Fed decision and the potential reaction in the US dollar. I'm Maria Pachortavis, and joining me is Senior Investment Analyst Haralambos Pisaros. So Haralambos, the FOMC will announce its interest rate decision on Wednesday, but just a day before that, on Tuesday, we'll get CPI inflation data for May. What are we expecting? Do you think the Fed will skip a hike this time?
Hello, Maria. Yes, to be honest, I see a decent probability for the Fed to skip raising rates at this meeting. And it seems that the market holds that view as well. Specifically, investors are assigning a 30% probability, only a 30% probability for a 25 basis points hike, with the remaining 70% pointing to no action at all. However, they do largely expect a hike to be delivered in July. Now, the reason I believe that the Fed could wait for a while before they decide whether higher rates are needed is because recent data has pointed to slower wage growth and also slower prices charged in the manufacturing and services sectors. Having said that, though, just the day before the decision, we do get the US CPIs for May, which could well affect expectations heading into the meeting. Now, the headline rate is expected to slow notably, but this may be because the year-over-year change in oil prices have stayed well into the negative territory. I believe that investors will pay more attention to underlying price pressures. In other words, they may focus on the core CPI rate, which is also expected to have declined, but from 5.5 to 5.3% year on year. In any case, slowing inflation could confirm investors' view and perhaps convince the Fed to refrain from pushing the hike button this week.
So what will all this mean for the dollar, both in the short and longer term?
I believe that the dollar's reaction will not only depend on the CPIs and the Fed's decision to hike or not. I believe that a lot will depend on the updated macroeconomic projections and the dot plot as well. And I say that because conditional upon a summer hike either in June or July, investors are expecting two quarter point rate cuts to be delivered by February. So yes, the dot plot could also attract special attention. To say it in other words, I believe that the dollar's reaction, the dollar's forthcoming direction, let's say, will depend on many variables and several combinations of outcomes. And to just explain, yes, if inflation slows on Tuesday, the Fed will be more tempted to stay sidelined. However, the dollar could still rally after the meeting if the new dot plot points to a higher median rate, because this could be translated as a hike in July and no rate cuts for this year. Now, conditional upon inflation surprising to the upside. And in other words, if we see Tuesday's data pointing to accelerating inflation, the only decision that could support the dollar on Wednesday may be a rate increase, because a potential skip could disappoint those adding to their hike bets just the day before. For the greenback to come under strong selling interest, no matter what the outcome of the CPIs is, the Fed may need to stay sidelined and perhaps signal that they are done raising rates, which in my opinion, is the least likely outcome because we've heard several Fed officials saying that even if they skip a hike in June, they could raise rates in upcoming meetings.
All right, Lombos, thanks so much. And thanks for joining us for this Forex Preview at XM.com.